So by far the biggest reason why Chipotle stock is down so much after the results came out on July 23rd is because of comparable restaurant sales, which decreased 4% year over year. Now, Chipotle has long been one of the best restaurant companies on this specific metric, which measures how much sales at existing restaurants increased year over year. That's a measure of organic demand for a company's products and services. And with comparable restaurant sales declining, that means people are visiting Chipotle restaurants less frequently. And that resulted in the operating profit margin declining to 18.2%, down from 19.7%. I mentioned this is one of the best operating restaurant companies, or they have been, under the leadership of the previous CEO, Brian Niccol. And there's a reason why Starbucks paid almost $20 million to attract Brian Niccol away from Chipotle, because this company had performed absolutely excellently over the previous, I want to say, 5 to 8 years. And still, they're still seeing the benefits of some of the policies that the previous CEO implemented. But now, just a few short months since the CEO's exit, you're already seeing cracks in the armor. But still, cash flow from operations came in at 1.1 billion, about the same, a little bit less than what they reported last year, 1.18 billion compared to 1.131 billion in the same time last year. Average sales at each restaurant also has declined for 2 consecutive quarters, peaking at 3.2 uh, peaking at 3.2 billion in the quarter that ended December 31st, 2024, falling all the way down to 3.1 million in the most recently ended quarter. So you've seen 2 consecutive quarters of declines in this critically important metric, but still, this number at 3.1 million for each restaurant location is among the highest of any restaurant in the United States. So they're still really strong, but the trend is going in the opposite direction. So now let me share with you my proprietary discounted cash flow valuation model. I updated this following the earnings release, and my intrinsic value per share calculation for Chipotle has the business worth $36 a share. The current market price, even after the decline, is more than the intrinsic value per share at $45. Chipotle's forward price to earnings at 35, while it's the lowest it's been going all the way back to January of 2025. To answer the question, do I think Chipotle stock is a buy on this dip here? I say no.
Click the link below to watch the full video.